Hello and welcome to this quick special conversation on the sector that really dominated the market action today. And we are talking about IT services. Well, IT stocks plunged after analysts reset expectations following Infosys' fourth quarter disappointment. The tech company shocked investors by missing its growth guidance for the first time in 6 years. That's, of course, the full year growth guidance for FY23. Concerns over deal cancellations and ramp downs across key sectors dragged the stock and its peers lower. In fact, mid-cap IT players like Infosys, Q4, LTI, Mindtree also saw some deep gashes. Rima, of course, has been number crunching through the day, going through a lot of the street views. So, Rima, now that you've had a good 8-9 hours to digest everything, what's the take? A disappointment, yes, but more importantly, what now?
Absolutely. The stock finally ends with a cut of 9.5%, though it did recover more than 6% from the day's high. I think you can classify Q4 as a shock. A minus 3.2% revenue growth, a revenue decline in the March quarter, margins contraction, a very muted guidance for next year, a mid-single digit kind of growth, 4 to 7%, the margin guidance band being brought lower to 20 to 22%, all disappointed the street. The other point about Infosys is that this is a widely owned, it was a favorite, a darling of all the technology investors. Its weightage in the Nifty was also the highest amongst peers at 6.75%, but amongst the mutual fund and the FPI, its holding was far more. Mutual fund holding domestic at 17.7%, while the FPI holding was more than 36%. So that's also why the extent of sell-off was so much more in the case of Infosys. The problem is that they faced a widespread unplanned project ramp downs. This happened across sectors, right? Not just BFSI in North America. It happened in retail, it happened in telecom. So it was more across sectors. And secondly, they also faced an impact of project cancellations, something TCS did not. Post this performance, brokerages have brought down their EPS estimates. On an average, EPS estimates have come down by 7 to 10%. And Nomura, for instance, has a neutral call. CLSA is bullish in the stock. They've downgraded it from a buy to outperform rating. The target price is down to 1550, but they've lowered the valuation multiple. Nomura, as I said, is neutral now. JP Morgan is underway. Their target price is at 1200, and Citi too is worried about Infosys, and they've lowered the target price to 1400 after bringing down the rating to 1400 rupees. Another stock which saw a bit of a correction today was Tech Mahindra, and that's on account of a read-through. Now, both Infi and TCS clocked in a revenue decline in the communications vertical. That's the telecom vertical. And telecom vertical contributes 40% to Tech Mahindra's revenue. So the street is fearing that the communications vertical will slow down for Tech Mahindra, dragging down their overall growth, which is why Citi also downgraded Tech Mahindra in today's trade, apart from Infosys. But what's the way forward? Is this pain going to be short-lived, or is it going to be more prolonged? Will it hurt the FY25 revenue and margin estimates more than what the street was anticipating? Ravi Menon, the analyst at the Macquarie Group, is now with us on the show. Ravi, you've been bullish in the IT camp. You believe the drivers for growth are more structural in nature, but you've also been disappointed by the Infi numbers. You downgraded Infosys to a neutral. What's the way forward according to you? FY24 and FY25. What should we expect in numbers and outlook?
Yes, I have been bullish, and I don't see any reason to change that bullish stance on the sector demand, because we don't know when a US recession happens, right? We have been waiting for this US recession for the last, I think, 12-15 months or so. And we might actually be here already. A recession is usually declared only much after the fact, right? I mean, that's how it's been historically. And maybe we are in a recession right now. If we are in a recession, I don't think these numbers are too bad, especially what TCS has reported, which is still 0.6% growth. Infosys, I think, was disappointing. I mean, there is a 45 basis points impact from slightly lower pass-through costs. So you could call it 2.8% decline instead of 3.2, but it's still 2.8% decline versus 3.6% growth. I think that's too far a divergence between the two firms to be justified. I'm not sure exactly what's caused it. I mean, like you said, they have blamed some project deferrals, some project cancellations, and you've seen that at least 80 bips of the decline came from North America communications. There, I think, they had done a large deal with Verizon, if you recall, a few years back. Possibly because the 5G rollout has not really yielded dividends for any telco all over the world. ARPUs have stagnated. Maybe there are cuts there. And we had already heard Tech Mahindra talk about pressure on telecom some time back. So today, maybe Infosys is catching that a little later because they're on a different side of the business at Verizon compared to Tech Mahindra. So that's possible. And from here, what do we expect? We think that we've not heard of major project cancellations. Channel checks indicate that people have put capex on hold. That was a knee-jerk reaction, especially in the wake of SVB. But these should start coming back in May or June. That's what we expect. And you have the seasonality help as well in Q1. So I would think we should look at somewhere between 1% and 2% growth in Q1 for most of these firms.
Okay, so you're still, of course, keeping the optimism going that this is a temporary patch and it should resolve soon. Ravi, hi. So what does history tell us? I don't know if you've had the time to do any correlation analysis in this. If we go back to US, because now we're talking about sort of projecting IT spends in a slowing US macroeconomic environment. So what does history tell us? In the past, when we've gone through these slow patches, the Fed has usually been throwing money at the markets. This time, that has been missing, and maybe that's also souring sentiment. So any sense of how this could unravel, given how these economic slow patches have impacted IT demand in yesteryears?
It's an interesting question. And I think that, as investors, we have too often correlated the US economic cycle to Indian IT, and we are primarily looking at only that, right? But there is a larger cycle at play, which is a technology refresh cycle. This industry as such had, really low base back in 2001. We were tiny vendors operating at the fringes back when the Y2K, post Y2K, the web.com crash happened in the US economy. And that's when we suffered because we were all vendors in the fringes. If you look at what happened in 2002, Accenture's outsourcing grew more than 30% in that year. Its consulting declined 7%. And as you know, Indian IT is closer to Accenture's outsourcing portfolio than the consulting side. So we thought that this recession too, that's what we should expect. Especially, we might even do better than that because there is a strong technology refresh at play, which is why we think Indian vendors should do relatively better in this refresh. And back then, of course, Accenture's outsourcing, the base was really small. It's not close to the base TCS is currently. So of course, adjusted for that. But we will still look at growth even in this year, even in the face of a US recession.
You said the projects which have been deferred right now will come back on stream in the month of May and June. Can we expect a big bump up in growth in Q2 then, as this pent-up demand, not pent-up demand, but deferred projects come on stream?
It is possible, Rima, but I think that will be the bull case for it. The base case that we have built in does not account for that. We are expecting more of a normal Q2 because there may be some capex that will get cut. Some companies will face, a lot more of this economic downturn, right? That's the nature of all recession, right? Some companies will have that. So they might cancel projects. So while some might come back on steam. So it could be mixed and we might end up with a more normal looking Q2. That's our base case.
Okay. Ravi, what are the major risks? I mean, there are bears there who point out perhaps that, companies have, even on the manpower side, they've perhaps overbooked, and there'll be a lot of mass on the bench as we go through this period of slower growth. What could be the biggest risks, unknown risks, which we perhaps are not factoring in after listening to TCS and Infosys?
The unknown risk, of course, is that the US recession deepens, right? I mean, if we see something anywhere close to the GFC, then, of course, what we are talking about will be wrong. But in that case, I think one should not be in any equities, right? I mean, I think being in IT services alone would not really be a problem then. And I think that's one. And when you talk about the manpower, I don't think that there is an issue of overstuffing. There are a lot of vendor consolidation deals that are in the market. I've heard of very large deals in the insurance, property and casualty space in the US, also in high tech. These high tech, especially the segment that's not been doing too well, we have seen some pressure there. So with large deals, vendor consolidation deals, we're expecting that vertical to come back to good growth. Similarly for insurance as well. So if that happens, that will offset a lot of this pressure, and that's what we're expecting. should happen because Indian firms are now strategic vendors who are in a good position to benefit from it. And that's the first time that going into a US recession, that's the situation, that's the setup, because we were not strategic vendors ever before. Even going into the GFC, Indian vendors were not really strategic vendors.
Okay. One of the read-through is that communication of the telecom vertical has deepened or declined quite a bit for Infy and TCS, having negative ramifications for Tech Mahindra. Any other read-through which directly impacts, which you would keep any IT company on your watch list based on the geographical or the sectoral performance?
I don't think that even what Infosys has seen, right? We would not really extrapolate that to Tech Mahindra. I think TechM might have seen it first. And Infy might have seen it later. And it also because TechM operates more on the network side and Infy operates more on the application development maintenance side. Infy might have seen it a little later and probably worse because, networks, there is a certain amount. I mean, a telco cannot cut spend on that more than a certain level. Beyond that, it needs, that's really the core revenue generating part, right? So the GNA side, which is internal IT, they might cut more. So I think TechM might escape better than what today's stock price reaction indicates. And for other firms as well, I think there has been a lot of concern about regional banks and, whether this is going to impact firms like Coforge. We don't think so because from what we've seen so far, what we've heard from channel checks is that US regional banks are still spending. We are still seeing them, continue to embark on digital transformation programs. So we don't think that there is much of a read-through for other firms.
So, Ravi, just to then sum it up, the reason I'm asking is that it was really not about the US banks, right? We thought that would be the only area of problem, but what I think really spooked sentiment was that Infosys and TCS, Infosys in particular is talking about, ramp downs in retail, TCS is saying manufacturing, well beyond limited mid-sized US banks. Are you confident that this is just a one-quarter phenomena and this is not the impact of a full-blown economic recession that's only begun to play out?
Well, this could be a recession. Like I said, we could already be in a recession and this is the impact of a recession. But next quarter, we do have the benefit of seasonality. And, it looks like people have not really cut CapEx. And they are not looking to cut spend. I mean, IT budgets are not getting cut. They're not falling off a cliff, because local subcontracting is still pretty strong. You can see that in US employment data as well. IT unemployment is very low. We think that it's the worst is possibly this. Could it get worse? Possible, right? But I think that is less likely than a slight growth for next quarter.
Ravi, thank you very much for taking the time out and chatting with us. Great conversation, great insights. Thank you very much for joining in. Get into a break. On the other side, Manisha will be joining in with all that.